Welcome to the Orbit. It is Thursday, April 11th. We've got stocks slightly in the red. We're about an hour into the trading day. And the stocks have been a little volatile this morning, a little indecisive within a tight range. We haven't seen any big moves, but we had a cooler than expected PPI number this morning, and that follows up yesterday's hotter than expected CPI, which injected a little bit of a volatility back into the market. And we actually were in the green early pre-market after that number came out. We have since sold off a little bit. You can see that we are looking at a 1 week chart. You can see that big red candle from the open this morning. What's happening here is, volatility is picking up a little bit, but we are still kind of trading in a tight range, and it's showing a little bit of uncertainty. It's a little bit of a game of chicken in the market right now. We are 51.50, where if you go back 1 month, basically unchanged on the month, but you can see about a 3 to 3.5% range that we have been trading in, with volatility within that tight range, but volatility nonetheless. And with the options, what we are seeing is a pickup a little bit of some of that 0 DTE and short duration volatility. We are looking at tomorrow, which is about a 0.9% expected move, which has been hanging out around 0.9 or 1% into Friday's expiry for basically the last 2 days. So in other words, volatility is picking up. The expected move is staying about the same. And we are now through the CPI, we are through the FOMC minutes, we are through the PPI, but we still have this uncertainty, this little bit of game of chicken in the market around this 51.50 level. We have some big bank earnings tomorrow morning, which we'll get to those charts in a second, because they actually are at very important levels, and therefore the market is at a very important level. Going back to a 3-month chart in SPX, you can sort of see what we're talking about. Is we've had this channel, this upward trajectory that, as you look at this last month, clearly we have started to at least go sideways, if not begin a little bit of a rollover into a pullback. And that's that uncertainty in the market. You can kind of feel it with traders. Now, the good thing from an options premium selling standpoint is you are getting slightly higher vols. If we go to the 1 month chart in SPX, we've got IV 20 or so in short duration, about 15 out for the next week, and then about 14 out beyond that. That is a couple of points higher than what we've seen over the last month and a half, let's say, where going out 2 to 3 weeks, you would see maybe 11 IV, or we've seen a lot of like 10, and we've even seen some single digit IVs in sort of short duration, maybe 1 week out type situations. So you are getting a little bit of an IV boost here, and there is some put buying. We hadn't seen put buying in a long time. And I think the way to sort of summarize what's going on in the market, or at least the way it feels right now, is people aren't really panicking. They're not selling stocks necessarily, but they might be buying dips while also buying puts at this moment. And that would hold the market and at least make it go sideways. Now we are about to go into earnings season, and now we're going to start to see some individual stock volatility. As far as 0 DTE trading in SPX today, we've got about a 0.5 point expected move, and the levels there are at about right now 51.80 to the upside and 51.30 to the downside. I think it's important on a day like this, where the market's trying to sort of decide which direction it's going to go, or whether it's just going to finish flat at 51.50, to look out to tomorrow's close. And there we've got a basically 5,100, 5,200, which we've been seeing for a while. And so those are some levels to kind of lean on if you're a premium seller over the next, today into tomorrow. But let's look at that on the 1 day chart. Let's just take an iron condor here. The market is basically unchanged. We're down 6 points. And let's do an iron condor expiring today. So this is the expected move strikes, which is a short strike of 51.80, 51.30. If you take this down and get closer, let's just take it up so that the short call is at the 5,200 level. about 48 points higher than here in the SPX. And now we're down about that, risking 420 to make 80. If you took, maybe if you were a little bit, took this short put up a little bit. On that 5120 level to the downside, this is a slightly more bullish SPX iron condor for today. So 5120 on the downside, 5200 on the upside. We're around that 100 to, making 100, risking 400. We could take the entire trade down a strike or two and maybe do the 5110, 5190. And again, that's around that, risking 400 to make 100. This is one way to use it. We're sort of leaning on tomorrow's expected move to potentially make trades today. And then obviously the other way to do that would be legging into, for instance, when the market was SPX opened this morning, you got a run of maybe 20 points to the upside. Perhaps that was a way to get into a credit call spread closer up to that 5200 level, and then vice versa. If the market started coming down and you saw it 5140 or 5135, that might be the opportunity to get into that 5100 short strike credit put spread. There's a couple of different ways to do this. We could end up having a slightly boring day and ending up somewhere near 5150, but you do have to be careful about those late day moves, and there could be some positioning ahead of tomorrow's earnings. As far as the stocks reporting tomorrow, we are looking at JP Morgan. We've got about a 3.6% expected move, and I just kind of wanted to take this out on the chart a little bit and show you the importance of this level. You can see that expected move to the upside would barely be a new high in the stock, but a move to the downside here. To the downside, we're looking at about 186, 187 right now, with the stock 193 and a half, 194. You can see on that longer term chart would basically be a pretty disappointing thing for the market overall. When we go into Wells Fargo, we see, and obviously Wells Fargo is heavily involved in the mortgage business. Same thing. Look at that chart, 1 month chart. It's basically been going sideways in a very tight range, and you can see that expected move. The same sort of setup where we've got the expected move, and I'm highlighting this one right here, which is Friday. The expected move to the upside there is about 58, and to the downside is 54. And on a 3-month chart, you can see what that would do to the stock. And then you can imagine how that would carry over to the broader market, particularly the SPX. Sometimes we see with bank earnings, we see that kind of volatility in multiple directions, and it ends up where the XLF doesn't move much at all because, say, JP Morgan goes up, Wells Fargo goes down. What you would be looking for tomorrow morning is that they all move in unison in one direction. Of course, the big ones to keep an eye on as far as overall market sentiment and what's going on with inflation and with borrowing rates and things like that is KRE, as those smaller regional banks start to report. And let's go look on a 3-month chart there. Looks a little bit like the Wells Fargo chart. And these are the banks that are in the news. They're sitting on some very low interest loans that were locked in before we saw this bout of inflation in the economy.